Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn & Associates with your weekend edition of your metals market update, and this is for Friday, the 1st of February. Now remember, on our weekend edition, I start off with a monthly chart, and then I move to weekly charts. The idea is to give you a little broader picture. I would have liked to have written some metal reports already later in January. Haven't been able to do it. We've had weather scenarios and a lot of activity in the market, so it's been an interesting time. Gold has certainly had a heck of a run. It's down a little bit today, and so silver and copper. But these markets have acted better as the markets are seeing that the Fed is on hold. There's hope for Chinese-U.S. trade talks to go forward. We're getting into the home stretch where the president either makes and says things are going well and he'll either do a deal or give an extension in March, or if there's nothing going positive, he's going to slap a whole round of tariffs on this market. Then you've got the wall, you've got Brexit taking place. There's so much going on that it's a trader's delight time. When I look at a monthly chart of gold, we haven't still taken out these old highs, and you got triple tops in here that you can see. The resistance area is clear at 1354, the 100-week average of closes, up to the upper Bollinger Band at 1367. Support on the chart is back down at the 18-week moving average at 1275.50. So what do we have here? Well, we certainly have the pattern of lower highs, lower lows, but it's nullified when prices close over an 18-week average, which it's done, and momentum is up. So the market, I'm probably going to end up, I hope, saying we've got a trading lows here, we've got resistance up in this area, and that's where I think we're at. When we look at the weekly chart, we've gone on a closing basis on weeks from 1176.50 all the way up now, gone up roughly $140 an ounce. That's a pretty good rise. So you're looking at a market that's up over 10% off those lows. You can see where this low was at 1161.40. That's a price low, not a closing low, all the way up to the current high that you're at. So that's what, $150 an ounce. That's pretty good too. As we step onto the chart and we look at the weekly chart with swing lines, you can see you've had a pattern, past tense, higher lows, higher highs that began right back here, the October-November time frame. The market got over at that time the 18-week average and stayed over it as well. The first resistance, it didn't act as much resistance, the 200-week average. You fell back, found support, rallied through the 100-week, tried to break back to it last week, couldn't do it. Where you've got resistance against the market are the upper Bollinger Bands, but resistance is not the end of a trend. Resistance is just that word. Markets that get over that band often pull back to the right under it, offering better opportunities if you're looking to get into the market. Getting in over a Bollinger Band on the long side is something I have never preached, and I don't preach getting short under lower Bollinger Bands. Not interested. You get here, it gets up to that number. It doesn't look like a lot. When you're using leverage in futures, you got to be careful. Momentum-wise, bullish. Slow stochastics, they don't get overbought or oversold on weekly charts. They point up or down or sideways. They're still in the bullish mode. Momentum is up there. Bias is up because you're over the 18-week average, and the swing line is up, but you are at a resistance point. The gold-silver ratio did what I wanted a while back. Remember, I said in order to get a bull market in metals, it often has to come from silver joining the parade and actually outperforming gold a bit. And you've gone from needing 86.5 ounces of silver for 1 ounce of gold down to right now 82. But more important to me, it's staying under the 18-week moving average of closes that you see right there. When we go to the gold ETF, You can see how, like the futures, it's run up to the upper Bollinger Band. Unlike the futures, it's not in a trend per se. It's got a lower low, higher high, but it's certainly got a heck of a lot of upside bias, and it's had it. It only got into this recently, the sideways action. Back here, it certainly turned bullish, and it has stayed bullish. In the GDX, the miners, momentum is up. Bias is up. This market's come alive with it able to get over the 100-week average. Now, that number's 21.89. You're over it right now by about 60 cents. I wouldn't be surprised if it tries to pull back to it very shortly. There's nothing bearish, though. It might have gotten ahead of itself. Silver market's encountering serious resistance at the upper Bollinger Band, come at 1604, up to the 100-week average at 1623. Momentum is bullish. The bias is up because you're over the 18-week average, and you certainly have the bullish pattern there. In the copper market, it's all hands on deck. I'm applauding. Can we make a deal with China? If you do, copper likely is going to use this whole sideways action as a base to move from. I said base because I would assume it gets friendly if we make a deal. What if there's no deal and this whole thing falls apart? Then this can become a top area for another move to the downside. And that is why you're just churning back and forth in this, not really moving one way or the other. At least that's what I think. The platinum market has got higher lows, higher highs. That's the definition of an uptrend. The bias is up because it closed over that 18-week average, and momentum is up. So I look for support back at the 821 level, and I wouldn't want to see prices under 786.50. In the palladium market, you still have momentum, locked in, friendly. You still have the overall bull trend. And I'm aware that the daily charts have corrected and went back to the 18-day average, but it did not impact in a negative way the bigger picture, which is still bullish on this chart. In the dollar index, you have a bear market at this point. Lower highs, lower lows. I don't know where this low will finally end up. Support comes in 94.68 to 94.37. Resistance at 96.07. You'd have to get up and over 96.37 on a weekly basis in order to negate that. You know, I talk about this and a heck of a lot more in my morning subscriber videos because it's in there that I am able to tell you, buy here, sell there. I am very limited in these videos that you love to watch at the end of the day from saying you should go long here, you should go short there, here's a day trade idea, here's a position trade idea, here's your exact risk with it, take your profit here. I can do that in my morning subscriber video because it's not posted for the public. You need a user ID and password to get into it, and in addition, I charge a subscription fee. I mean, don't get me wrong, if you've never seen my research, I will give you a free trial to it. But if you've seen my research, it's not too bad. $30, 30 days for $8, $7.95. After that, $15 for every 30 days, and I am going to come out with a yearly pricing. To get access, you can call my staff. They'll take care of you. If not, go to our website, www.iraepstein.com. Under Research or Education, you'll see Morning Subscriber video. Click on it, and away you go. I'm Ira Epstein. You have a great weekend. I'll see everybody Monday.